Level 0. The psychological inertia. You have $4,200 sitting in a savings account. It sits. It waits. It does nothing for you. Somewhere, your bank is using those dead dollars to fund a $340 million loan for a glass skyscraper you'll never enter. Every 2 weeks, your paycheck arrives. You spend the majority. You save a fraction. You've heard the term compound interest whispered in classrooms or seen it in clickbait headlines. You nodded like you understood. But you didn't. You open a high-yield savings account because you want to feel smart. You set an automatic transfer of $200. At the end of the year, you have earned $89 in interest. You stare at that number. $89, it feels like a joke. It feels like a waste of time. You're right to feel that way. But you are wrong about why. This was never about the $89. It was about the mechanism you just toggled from off to on. The machine is breathing now. You aren't an investor yet, you're a depositor. But the gap is closing. Level 1, the first mutation. You open a brokerage account. You buy an index fund, $500, you press confirm and your heart thumps once. You've read the stats, the S&P 500, 10.5% annually for 80 years. You turn on the dividend reinvestment switch. Every payout, no matter how small, buys more shares. In month 1, you have $1.40 in gains. In month 12, you have $6,300 invested and $180 in gains. Then, the market bleeds. A 6% drop in a week. Your portfolio vanishes by $300 overnight. Your thumb hovers over the sell button. You stop. You put the phone face down. You breathe. You hold. You realize something. You stop seeing money as paper to be traded for objects. You see it as a workforce. Every dollar is a clone of yourself, sent out to work 24 hours a day without rest, without food, without complaint. The machine is faster now. You are an investor. Level 2. The optimization threshold. You have $47,000 in index funds. Your Sunday ritual is now a spreadsheet. You max out your Roth IRA, $7,000 a year, destined to grow tax-free until the end of time. You capture the employer match on your 401k to the cent. You learn that a 1% expense ratio on $500,000 will eventually cost you $360,000. You switch funds immediately, 0.03%. You don't look back. Your friends ask you for the secret. They want to hear about the next moonshot coin or a tech stock tip. You give them the boring truth. Automate, diversify, leave it alone. They look disappointed. They don't understand that wealth is invisible. It is a lack of signal. It is a lack of applause. The first 100,000 takes 8 years. The next takes 4. The one after that takes 2. Compounding is no longer linear. It is accelerating. Level 3. The silent acceleration. Your net worth crosses $400,000. You don't buy a watch. You don't buy a car. You open your spreadsheet and you recalculate. Your portfolio now earns more in a single quarter than your starting salary did in a year. You are no longer just investing. You are optimizing. The market hikes rates. Your portfolio drops by $76,000 on paper. You don't panic. You buy the dip. You tell no one. Building wealth is a lonely, boring, repetitive process that rewards the disciplined and punishes the emotional. You move beyond simple index funds. You look at municipal bonds for tax efficiency. You look at REITs for real asset exposure. You stop thinking in annual returns. You start thinking in decades. The calendar on your wall is irrelevant. You have a 12-month emergency fund and airtight estate documents. You are a wealth builder. The machine no longer needs your attention to grow. It just needs you to stay out of its way. Level 4. The accredited gate. The number passes 1.2 million. New doors open, but they don't creak. They slide open silently. You are now an accredited investor. The private markets appear. A private equity co-investment lands on your desk. $50,000 minimum. 5-year lockup. You read the 2 and 20 structure. You understand the waterfall. You wire the money without hesitation. You enter a private credit fund. 12% floating distributions. You are now being paid a premium for your liquidity. You are playing a different game than the person at level 2. The board has changed. It wasn't hidden from you before. It just required capital to access capital. Now you have both. You are a capital allocator. The machine is no longer a tool. It is a landscape. Level 5. The architectural shift. $6.4 million. You say it once, then never again. You hire a family office. The entry fee was $5 million. They offer you things the public doesn't know exist. Pre-IPO access. Structured notes. Hedge funds closed to outside air. Your effective tax rate drops to 11%. This isn't luck. It's 6 weeks of legal structuring, opportunity zones, charitable remainder trusts, step-up basis. You have built an architecture that builds wealth for people who haven't been born yet. Your children have $500,000 in their names before they can speak. Compound interest has graduated from personal finance. It is now structural power. You haven't checked your returns in 3 years. You don't need to. You are the architect of a self-sustaining ecosystem. Level 6, the proximity of power. $40 million in assets. You stopped counting a decade ago. Capital at this scale creates a gravity well. You sit on boards not because you searched for them, but because your capital demands a seat. You co-sponsor a venture fund. Your name is on the term sheet. but never the press release. You find yourself at dinner with a former Treasury Secretary. You didn't invite him, someone else did. That is the point. You didn't seek power, but capital at this scale is inseparable from it. When the market crashes 30%, you don't feel the heat. You have the insulation of time and liquidity. You treat the crash as a clearance sale. Those without your buffers are forced to sell at the bottom. Their loss moves through the gears of the global economy, and eventually it reaches you. The system isn't broken. It's functioning exactly as designed. Level 7, the institutional ghost. You are no longer an individual. You are a trust, a holding company, a foundation. The foundation holds $200 million. It earns 7% and distributes 5%. The remaining 2% re-enters the principal. It will grow forever. The name on the skyscraper isn't your name. It's the name of the trust. Your great-grandchildren will be accredited investors at birth. They will sit on boards because the family name carries the weight of a century of compounding. Compound interest has completed its final alchemy. It has converted currency into legacy. It has traded human connection for institutional immortality. You stopped checking the machine a long time ago. It doesn't need your name. It doesn't need your presence. It doesn't need you. The full circle. Somewhere right now, a 23-year-old walks into a glass tower for his first day of work. He sits at a desk and opens his first brokerage account. He sets up an automatic transfer of $200. He feels smart. He feels in control. He thinks this is about his retirement. He thinks this is about buying a house or feeling secure. He has no idea that the $200 is not the point. He has no idea that he has just fed the machine that will eventually outlive him. He thinks he is starting a journey. He doesn't realize he is becoming a part of the architecture, but he will.